Hey, what's up guys? It's Corey here with Dapper Dellers. Today we're going to talk about how I picked the 400% growth stocks that I have in my portfolio, where I found them, and how you can do the same thing to hopefully find these stocks on your own and not depend on my advice in the future. But anyway, let's get started. So this channel is all about using the online income opportunity we have by Merch by Amazon and Etsy to build our income online and then invest this income in things like the stock market and real estate. If that sounds like something you're interested in, like and subscribe, and let's get started. So, looking for these 400% growth stocks is really one of the foundations of how you're going to make any sort of money in the future. It doesn't have to be a 400% growth stock. You can be a swing trader, you can be someone who's a buy and hold investor, but these are the foundations of exactly how I look at companies whenever I'm evaluating them to see if they're worth investing in for the long haul. I am a long haul investor. Anything between 5 to 10 years is where I'm looking for a company whenever I invest. And I follow these fundamentals anytime I make an investment in these kinds of companies. And I hope that this helps you in the future. And I hope that you are able to find the next 400% growth stock and then tell me all about it so that I can celebrate with you. But anyway, so here are the 3 things that I look for whenever I'm looking for a growth stock. And then at the end of this video, I'll tell you where I usually go to find these growth stocks. So the first thing is the balance sheet. Is it a cash heavy balance sheet, or is it a debt heavy balance sheet? And we'll go into more of these in a little bit. The second thing is, are they an innovator or a disruptor? And the third thing is, are they the best in their field? Now, this might sound familiar because it sounds similar to what Jeremy Lefebvre does on a financial education. And it's really Jeremy's blueprint, because this is the blueprint that I've used. And obviously it's worked for him and it's worked for me, and I hope that this helps you as well. So anyway, let's talk first about the financial soundness of a company that you're going to invest in. Because whenever you're investing in this company, you do not want to take the risk of investing in a company that is debt loaded to the ceiling and potentially going to go out of business within a year of you investing in them. So you want to invest in companies that have a cash loaded balance sheet. And how you can do this is going into Yahoo Finance, putting in the ticker symbol for the company that you're looking at, and then going to the balance sheet section under financials, and then it is going to give you the option to see the cash position, or the cash that it has on hand, and then you're going to be able to see the current debt that it has if you expand the liabilities section of the balance sheet as well. And there you're going to be able to see if the current liabilities that the company has is over the amount of cash that it has on hand. So, quick disclaimer before we go any further. Whenever you're looking at companies that are potentially 400% growth stocks in the future, you're going to be looking at companies that are likely small to medium cap companies, which means that they're going to be startups and they're not really going to have a positive earnings per share. And the odds that these are going to be cash loaded companies is a little small. However, this is the type of company that you do want to invest in, because if it is a cash-loaded company, it means that you're going to be a bit more sound whenever you're investing in these companies. So anyway, going back to this balance sheet, if it has more cash on hand than it does current debt, that's usually a good sign for me, because it means that if they do hit a sticky patch, they can just pay off all their debt and then use the revenue to continue on their research and development processes and things like that. So usually, if the debt is over 2 times the amount of cash they have on hand, I'm out. There are no questions, no comments or anything. I'm just out of that stock, because it does not make sense to invest in a company that has more than twice the amount of debt than it does cash on hand. A person who is running any sort of personal life that has more debt than they have cash on hand is really not in a sound financial position, so it doesn't make sense to put your money at stake with a company that is in that same kind of financial position. So if I wouldn't do it in my personal life, I don't think that a business should do it, and that is why I would be out. So anyway, the cash on hand is really one of the main indicators for me, and the amount of debt they have on the balance sheet. So that is a quick and dirty way to see if a company is a company that is going to be worth investing in or looking further into in the future. Now let's talk about, is this company a disruptor in the future? Is this company bringing something to the market that is new? Now, whenever I say a disruptor, I don't mean that they are bringing something that is a revision of something that already exists or a remake of a current product. I'm talking about a company that is able to bring something to the market that people didn't know that they needed. So Amazon is a great example of this. Tesla is a great example of this. And Ford, back whenever the company started, was a great example of this, because one of Ford's most famous quotes was, "If I wanted to make something that people needed, I would have made faster horses." But Ford knew that the engine that he was making for the automobile was something that is going to be a disruptor and a life changer for civilization as a whole. So these are the type of companies that we want to invest in. These are the companies that are really going to set us apart and that are going to give us a great advantage as far as being able to get out there and do what we can to, really show the world that these are the companies that are going to do something that is going to add to the quality of life and was something that we didn't know that we needed until now. In my current portfolio, Ametis and Vuzix are those companies that I've been looking into and that I've invested into, and I've gotten more than a 400% return on both of those. So these are the companies that are really going to set apart any sort of advantage that we have as far as looking into companies that are going to be huge disruptors in the future. Ametis is a company that does renewable natural gas, and Vuzix is a company that does augmented reality, but mostly focuses in the medical and enterprise space. And also, if you're looking for people who are disruptors and innovators, you want to know people or want to invest in companies that are talkative about what they're doing. Think Tesla whenever you think about a company that is talkative. Tesla is always putting out reports. Tesla is always involving themselves in what's going on. And the same is going to be needed for the company that you are investing in the future. If you have a stock that you're looking into and you're potentially about to invest in, the financials are right, and you can see that they're a disruptor and an innovator, but you see that they really don't have anything going on as far as PR and news, then this could be a downside, because if it is a small to medium cap company, it means that not many people know about it and they're going to have to be doing their own PR. And if they're not doing any PR at all, it's really a hard sell to get the stock to go up at all if nobody knows what the company is doing. So whenever I say that you need to invest in a talkative company, I mean that they need to be putting out all sorts of information that let people know when they're making sales, when they have follow-on orders, when they have new business or anything like that, so that people know what's going on with the company and they're not just waiting for an earnings report every quarter to see if this company is worth investing in. That works for Apple and for a lot of other companies just because they are the companies that people know about, people trust, and whenever those quarterly earnings reports come out, we know that they're going to surprise us or let us down. So anyway, whenever you're investing in a company, you want to make sure they are an innovator and a disruptor, talkative, and are bringing something that the world doesn't know that it needs yet. And now finally, are they the best at what they do? Because it does not pay to invest in a runner-up. Nobody wants to be a runner-up, and nobody wants to invest in a second-place company. And you need to make sure that they have, if they are not the best in their field, do they have a distinct advantage or a unique advantage to their company? Whenever I think about this, there are companies like, I think Guitar or something, it's a satellite company out of Israel that has satellites around the world. But if you have looked into this company at all, you have seen probably that the Tesla, was it Starlink or whatever, is something that's coming out recently, and they have a few satellites as well, and Amazon as well is looking at getting into providing this sort of satellite-based internet. Now, the unique advantage that the Guitar or whatever this company is, I can't remember the name of it, I'll link to it somewhere here on the screen, but the unique advantage that this company has is that they already have satellites in place, whereas Tesla and Amazon are still fighting to get their satellites up into space and get into a position where they can actually provide internet. So the unique advantage that this company has is that they are already miles ahead of everyone else, where Tesla and Amazon do have the ability to catch up very quick. This company is poised to do even better because they're already in a position where they're offering something that is already working for companies like T-Mobile. So this is a great example of a company that has a unique advantage over market leaders like Tesla and Amazon. So in the case of Ametis and Vuzix, these two were the only companies in their field that were doing something and they were the best at it. Vuzix was the only, or still is the only company that is out there doing augmented reality on the scale that they have. And Ametis is the only company out there producing renewable natural gas in the way and at the scale that they are. So whenever you invest in companies, make sure they're solid financially, innovators and disruptors, and also market leaders or have a unique advantage to their business. And if you do these things, if you line all of these things up, it is going to be great for you, and you're going to basically love the results because you're going to get in a position where you have a 400x growth stock. And also, along with the unique advantage that a company has, you want to make sure that they have a great leadership team in place. The leadership team of a company and the experience that they have on their board of executives is really going to determine if this company is going to survive or not, and whether they're going to have the connections to do anything as a market disruptor, an innovator in the first place. So whenever you're looking at the unique advantage that a company has, look also towards their board of directors and the people that they have on staff leading the company. So anyway, where do you find these companies? Because this is all great information, but there are so many companies out there, it seems like it's just really hard to find where these companies are and how to get a list of these companies. And where do you see the people who are the current market innovators and things like that? Well, if you know me and if you've been following my channel at all, you know that I love to look for a stock that is beaten down to invest in. I love getting things on sale, and that definitely applies to the stock market as well. So really what I do is go to Google and then I type in top losers in the stock market for this month. And then I pull up a list and I start going down this list and put all of these, or the companies that show up in this list, through the lens of what we've talked about here. Now, first of all, I don't know anything about pharmatech or pharmaceuticals or biochemistry or anything like that. So anything like those, I immediately eliminate, and that's probably about 20-30% of the list. And then from there, I just look down the list to see which of these losers for the month have the potential to come back and eventually be the market winners. And this is exactly how I found Aemetis and Vuzix, my two top picks that have been over 400% growth for me. And honestly, this is where it takes a little bit of effort on your part, because you're going to need to weed out and actually put all of these things into practice to find which companies are the best for you, which companies you can understand. And the best way to find out if you have a winning company and if you fully understand this company is if you can explain it to your parents. And that sounds a little strange, but if you can explain it to your parents, who are likely in a generation above you and don't understand as much as you do in the technological realm, then that is a great indicator that you understand this company enough to know how it makes money, what the company does, the value it provides, and the unique proposition they have. So if the financials line up, then it's a great thing to continue to move forward with this company. So this is really how I do my research, and I always make sure to make this research last a week so that I avoid FOMO, because fear of missing out is one of those things that is going to cost you the most money ever. More than losing money on a stock, the urge or the ability to master that urge of FOMO and to take the week's worth of time to invest and investigate in a company is really going to be the most beneficial thing for you. Because if you're anything like me, whenever you find a stock that you truly love, it's hard to think of anything else, and you think that you found this amazing stock, and you think that if you wait one more day or one more hour, you're going to lose your chance and this stock is going to go through the roof because other people are going to find it. The truth is, if this stock is as amazing as you think it is, and it has the potential that you think it does, then getting in now is not going to be the make or break moment. So whenever you're doing this research, make sure you take the time to not let FOMO take over, because it's those emotional times where we really lose our ability to see clearly, and then we make big mistakes. So I hope all of this helps, guys. I hope that you are able to find the next 400% growth stock for you and to create financial freedom for yourselves and your family. If you have any questions, please put them in the comments below. And of course, I hope you guys have a great day. And remember, someone is going to do something amazing every day, guys. Why not you? See ya.